Now, the Australian economy is projected to be one of the worst performing across the Asia Pacific, rising interest rates and low productivity growth to blame. That's according to ratings agency S&P, Standards & Poor. They say that our economy will grow by just 1.2% next year, and they say that this is predicted to be the second worst of the 14 major Asia-Pacific economies they track, second only to Japan at 1.1%. Here to discuss this and to ask if they're right is business editor Ross Greenwood. He's host of Business Now. He's on every day at 4:30 right before my show. Ross, great to see you. Look, are they being pessimistic, Standards & Poor here, or do you think Australia will be one of the worst performing economies in the Asia Pacific?
Look, it's every likelihood that Australia is going to be very slow, there's no doubt. Whether Australia goes into recession or not, which many people are predicting, really only time will tell. It's going to be almost a fluke. The one thing in Australia's favour right now is its very strong population growth. 2% population growth means even before we do anything in this country, there's literally 2% more economic growth really there as a result of that rising population. But on top of that, what happens is what happens with interest rates from here. We know that probably the Reserve Bank has got 2 interest rate rises to come. That's going to suppress economic growth, and the catch-up of all these cumulative interest rate rises are yet to be really felt. And so really, in many ways, there are highly vulnerable people in Australia, those who have bought houses over the past 2 years in particular, those who have gone into businesses with debt over the past 2 years, and many of those people, sadly, are almost going to be the collateral damage as a result of this significant rate hike that Australia's seen to get rid of the inflation.
Look, one thing that is concerning is that we've seen initially the federal government was giving wage rises just to targeted groups, you know, those on the minimum wage who are the most vulnerable. But now we're starting to see a flow-on effect where other sectors are starting to demand wage rises that are keeping pace with inflation. So quite big wage rises. Do you think this means that while there are so many families really feeling the pain because of these consecutive RBA cash rate, interest rate rises, do you think the wage rises, if they are replicated in the private sector and other industries, are going to kind of diminish that impact and you know, it'll prolong the pain?
Indeed, many of those who are calling for these big wage rises are really almost taking a punt that the very strong labour market that we are seeing right now is going to stick around. My theory has always been it's better to pay a person just a little bit less if that person can hang on to their job rather than having an increasing number of people out of work, which really does cause stress on the economy and indeed can be devastating for those individual families. Now, the Reserve Bank has said it doesn't quite know where full employment lies, but it certainly isn't at 3.6%. It's more likely to be somewhere between 4.25% and 4.5%. But at the moment, anybody who wants a job broadly can get one. There's only, sort of 500,000 people are unemployed in Australia. There's 14 million people who have a job. That's the stark difference between the unemployed and the employed in Australia. Now, as you start to see businesses start to adapt and change to these new high interest environments, it's likely that the unemployment rate will rise and go back above 4%. This is where you could see somewhere between 150 and 200,000 people out of work over the next 12 to 18 months. As I say, that's when the hurt really starts to occur. And broadly, that's as a result of many employers saying, look, not only do we not maybe need the new workers we're now seeking, but also we can't afford the wages, and particularly the higher wages that may be demanded by some parts of our society.
Yeah. All right. I want to ask you about the PWC scandal. You've been covering this very well on your program, Ross. There's criticism today in the Fin Review by Jennifer Hewitt that PWC has handled this scandal extremely poorly. We've seen just in recent days the global company come in and try and take control. PwC is looking to sell their government consultancy work for just $1. Where's this going now?
So just I would get your head around that $1, right? The $1 that you and I could pay, right? So think about this is a business that has 1,750 employees. This is a business that has turnover of perhaps $500 million a year. And so bad is the reputational issue got for PwC that it's prepared to sell that business with all of its risk for $1. Now, if you get your head around that and understand that is the predicament that that PWC has found itself in because of its appalling communication, because of its inability to deal with a scandal. Really, when the torch has been shone upon it, it's refused to open itself up and let the sunlight in. Instead, it's closed itself down. It's refused to name those people responsible, or indeed to rapidly find out who is responsible and then name them. So all of these things have really been, mismanagement of the highest order. The greatest fear of the other accounting firms, because they've all got the same structures. Partnerships, they don't pay tax. Broadly, the partners pay tax, but the actual companies themselves, in the PWC case, $3 billion worth of revenue per year. Do you see them in the top taxpayers? You generally don't, because guess what? That money goes to the partners. They look after their own tax affairs. It's time that this sector was completely fixed up, because it is rife, there's no doubt, with conflicts of interest and with a lack of transparency to allow people to understand what they're doing and what they're accountable for.
Yeah, well, it starts with PwC, and there's going to be scrutiny, as you say, on many of the other firms. Russ Greenwood, thank you so much for joining me as always.